After 2 quarters where it appeared that revenue growth levels were slowing down, Seattle posted strong gains in 2012's first quarter. But a lot of construction is underway. What will that do to the market? Welcome to Apartment Market Dynamics from NPF Research. I'm Jay Parsons with your Seattle update. Seattle had very strong apartment demand through most of 2010 and the first half of 2011, but it really flattened in the second half of last year, and in turn we saw a stall out in occupancy and in rent growth. And we were hearing from operators who were starting to get a little bit concerned about the lack of demand in the market, that maybe Seattle had lost its glow a little bit. But in the first quarter of 2012, big demand returned. As you can see from this chart here, 2,171 units absorbed, and as a result, occupancy climbed 0.6 points up to 95.2%. That was the first time Seattle's been above 95% since the middle of 2008, just before occupancy rates cratered under the weight of a lot of new supply plus job loss. And the surge in demand gave operators the confidence to push rents again. Take a look at this chart showing quarterly rent change, and you can see that quarterly hikes above top 2% in the first half of 2011 eased in 3Q and then went negative in 4Q, but a bounce back in first quarter 2012, rents up 2.2%, and that puts Seattle back among the national leaders for quarterly rent growth, tying with San Jose for third place among the nation's core 50 markets. The only two that were better were somewhat of surprises, West Palm Beach and Nashville. However, year-over-year rent growth levels have eased a bit due to the slowdown in the second half of last year. Seattle is no longer among the national leaders for annual rent growth. In fact, it's looking pretty average, rent growth of just 4.8% year-over-year. That's just 20 basis points above the U.S. norm, and that is also down from the 6.2% annual hike recorded just 2 quarters ago. And certainly that Q1 bump was encouraging, but the annual number, about 4.8%, is a little more in line to what we're expecting to see going forward, and that's because of new supply. Take a look at this chart showing units under construction by quarter. Huge surge in new starts in Q1 of 2012, 6,379 units now under construction as of the end of Q1, and that's more than Seattle's historic averages, but it's still, as you can see, below the peaks from 2007 to 2009. But more apartments are planned, and so that construction number is probably going to get a little closer to those 2007, 2009 levels. And of that total underway, nearly 2/3 is located in just 2 urban core submarkets, InTown Seattle and Capitol Hill University District and Ballard. And let's single out the InTown area in particular for you. This area got a big chunk of supply in the last cycle, and it's going to get even more in this most recent one. Get this, InTown Seattle has more units underway than in any period dating back at least 2 decades. 2,550 units, as you can see from this chart. The only time that construction has topped even 2,000 units was back in Q3 of 2000. So occupancy rates will almost certainly take a hit in the urban core, and rent growth levels will probably ease as well. But we think that the rest of the market should do well enough, especially the northern and eastern suburbs, that for Seattle overall, the apartment fundamentals should remain pretty solid. We're looking for rent growth for the metro overall around 4.5% for the next year. And that wraps up for Seattle. So until next time, for Apartment Market Dynamics and NPF Research, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, NPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.